Welcome back to another episode of Profitless on Purpose, the nonprofit accounting podcast, and not just from one accountant's perspective. I'm one of your hosts, AJ Wheeler. With me this week is Mark Palardy.
Hey, everyone.
And Tony Cajigas is with us as well.
Hello.
Great episode this week. We got an article. The FASB just decided not to delay the lease standards for private companies and nonprofits. So that's coming down the pipeline. If you have leases beyond a year, you'll want to listen to that part of the podcast at least. Then we have an article, Building a Successful Remote or Hybrid Nonprofit Team. What are the tips and tricks you can use if your company was forced to go hybrid or remote? Or if you're making that move now, if you stuck it through COVID and you're just happening to turn that corner, we'll talk all about it in this episode. And then our last article for the week is The Power of Introverts, how they can help your nonprofit grow. It's not just an extrovert world out there. Introverts play a role in your nonprofit and operations, how you can support them and what to do, and how they can be helpful to your organization. And then we do have a question for the week, and it relates to how much board interaction do you need for expenses that are logged in a nonprofit? Do they need to review every one? Anyway, this week up first is Mark.
Yeah, thanks, AJ. My article is called FASB Decides Not to Delay Lease Standards for Private Companies and Nonprofits. This is by Michael Cohn from Accounting Today. This one is a little bit inside baseball for accountants, but I think it's an interesting aspect because FASB came out with some rules back in 2016, which have partially gone into effect for for-profit companies, but which have been delayed for nonprofits for quite a while due to pandemic and other things. And the nonprofit sector has said, hey, can you delay these rules? And FASB has said, yeah, the time of delays is over. So let's give you a little background first as to what's going on here. So for those of you who are accountants out there, you probably are aware that there are two kinds of leases that you can have, a capital lease and an operating lease. In the past, operating leases, right of use leases for like a rent lease, right? If it was long-term and it had some value, you would only have to disclose that in the notes on your financials and you could keep it off the balance sheet. This is was helpful because it allowed companies to keep some bigger expenses off the balance sheet and make themselves look like they didn't have as much debt or liabilities, I should say, on the balance sheet. So after a while, the FASB said, that's not necessarily, it doesn't really meet the needs of the users of statements because by just disclosing in the disclosure statements, it's not really giving you a true picture of what the assets and liabilities of an organization are. So, nonprofits have come in and said they want some more time because life is stressful enough, and they want, essentially another couple years to figure this out since they're having trouble enough raising money. So they don't necessarily want to put all these lease obligations on their balance sheet. And the answer from FASB was basically, well, it's never going to get better, right? Nonprofits are effectively always lacking for money and are always complaining. And it's time to just kind of bite the bullet and, effectively be on par with the for-profit companies. So it's an interesting article. I'm not sure how much there is to discuss. I don't know if you guys agree with FASB's decision or what you think, if you have thoughts, but I'd love to hear them.
Well, I think what this really highlights is accountants are no different from anybody else, and we hate change. I mean, I can remember taking CPE regarding this is, just as background, this requirement of capitalizing leases over a year that have economic substance, meaning they're material to the financial statements, have been in place for governmental accounting, the FASB, and for SEC or publicly traded companies through Peekaboo for 3 or 4 years or something like that. So this isn't new. And they've been threatening to do this ever since I've been in accounting. I mean, I can remember having CPE back like my first year in public accounting, like 10 years ago, this being on the table as coming down the pipeline and having like a technical discussion on how this would get booked to your balance sheet. Whether or not it provides users of the financial statement a better financial picture of nonprofits and small businesses or even public companies, I would venture public companies probably more so, especially like in the airline industry where a lot of their planes were leased and probably should have been represented on their balance sheet as like a long-term capital asset and a long-term liability to pay that. But that being said, we no longer have a choice. So this is coming down the pipeline and people are not the biggest fans because it requires more work. And so I think the takeaway from me in this is that this is coming, and if it's going to be implemented, if you're a December 31st, 2021, you will have to think about this in your this year's financial statement, your close of fiscal year 2021 as we record this. And if you have a fiscal year ending, June 30th, 2022, you will also need to think about this for your financial statements going forward. So I think the takeaway from this is just to understand what the requirements of this are. If you have an audit, I would suggest contacting your auditor or your outsourced, financial consultant to understand what the requirements are for you. The good news is because small businesses and nonprofits are the last ones to adopt this, there's plenty of examples out there of how to do this. You're not being thrust in to the deep part of the pool with no examples or having to read through the FASB pronouncements themselves and understand what they're trying to get at from a technical standpoint. Somebody has already figured this out for you that probably gets paid much more money in a public or governmental setting that you can reference and understand. So I think, just like anything, people hate change. This is just a change that's coming that, people kind of drug their heels about. I do think there was probably some good, reason set forward to delay this further. Like in a pandemic, you're essentially your lease, you're booking a liability and an asset at the same time on your books that, it looks weird, I guess, just like any other adoption of something that's putting a previous commitment on your financials. It just looks strange in the year that you adopt it. So, but FASB made their decision. It's set in stone. It's going to happen. So might as well get ready for it.
Yeah. I don't have much experience in this as my colleagues do, but it's coming down the pipe. You're going to have to deal with it. I understand in the article that the Pennsylvania Institute of CPAs, they sent a letter to FASB wanting to delay due to COVID, labor shortages, time and resources needed to compile all the information, so on and so forth. I basically echo what AJ said. It's you're going to have to get ready for it eventually. So your time's coming.
Yeah, and I would say, if you have these kind of leases, like AJ suggests, to get a jump on it and make sure you have accountants in-house that understand this, right? Because you're going to have to be looking at present values of particular leases and discount rates and all that kind of interesting aspects that go into capital and operating leases. So
I wonder if this will change the way leases are written. You know what I mean? If the like all these lessors will figure out that they can have a lease for 364 days, or 11 and a half months or something like that. So you don't have to book it. That's what'll be really interesting, I think, is if this changes lease terms at all to try and subvert putting it on your balance sheet.
Right. But are they? Yeah. But who wants to renegotiate a lease every year? And, are you going to, with your options and all that, that gets more expensive than just hiring an accountant to put it on your books, right? So,
well, and I think also too, we should probably point out that materiality matters. So like if you're leasing a coffee machine,
right,
that's like $50 a month or something like that, like you don't need to go and, or if you're leasing like, I don't know, something small like that, maybe even a copier falls under your materiality thresholds. Like just realize it's not everything. It's right. The big things,
And, there's a lot of big things out there. On that note, Tony, I guess you're up.
Yes, I do have the next article. It's entitled Building a Successful Remote Nonprofit Team. Basically, they go into talking about, is the grass always greener on the other side? They give some pros and cons as to working remotely. It's not for all people. They also give some tips for success. They say that make sure your nonprofit has a policy regarding your remote team. Some of the things that they talk about is active hours. Make sure your members are required to work a certain amount of hours. Have a technology policy. Also, communication platforms, response teams to emails, et cetera, et cetera. Also, security for your software to enable to protect your donor information. Also, who's eligible to work remotely, and also accessibility. They also go into talking about people working from home. More hours don't necessarily mean getting more accomplished. They also go into talking about some people, when they work from home, they don't get as much done as they do at the office. They go into, there was a study that said employees who work remotely average 1.4 more days of work time each month, which I thought was interesting. They talk about, when you're working at the office, they talk about certain distractions that people, not necessarily like, but some people feel more comfortable working from the office as opposed to home. So they also talk about how to keep your team motivated. They mentioned one thing was to have maybe a 5 to 15 minute meeting in the mornings to kick off your day and set priorities for your team members. Also, be video ready, either being able to jump on Zoom for a quick meeting, Slack, et cetera, et cetera. Also, you making sure that you're active on your settings when you're on your communication platforms. Then they talk about, it's not for everybody. Like I mentioned earlier, some people, you have to really stay focused, and it also depends on your home environment, what you got going on, so on and so forth. So, what are your thoughts about this, gentlemen?
Yeah, I think, we talked about in the first article, change is difficult. And if you were like an in-person, paper-driven office, especially like most nonprofits are, if you're small, you kind of, path of least resistance. If you have a paper invoice and a paper check, this was all done in person. You could go and talk to somebody. You could have meetings very easily. And then you were essentially forced into remote work. So I think it's taking a look at your processes and understanding how you can maintain what made your organization tick as far as like efficiency and who's doing what. And, if we're specifically talking about an accounting department going remote, making sure that controls are in place, documentation and retention of records and approvals, and the workflow isn't interrupted just because you went digital. I've seen this happen in the past where, pre-pandemic, moving somebody from a paper kind of driven environment to a digital paperless environment or a remote work kind of situation. It's a challenge. It sounds, like utopia, because you're no longer fighting with paper and printers and, and missing ink and all this kind of stuff. And everything's going to be so much easier because we have this new app or program that's going to do that for us. What people fail to realize is that change is difficult, and people are, if you had done a process for years the way that you've done it, and you're now trying to implement a new paperless way or a remote working way to do something, it's going to take some time to get used to it. And so I think building in time to work those kinks out is vital. So if, like going back and looking at the results of operations and documentation, maybe pulling some random expenses to make sure that the documentation is being kept for control purposes in those situations is vital if you're moving to this kind of thing. And the other thing that the article said is, this isn't for everybody. I think being able to schedule your time when it's just you, kind of in the same four walls for a year and get things done takes discipline, and it takes planning on the person's part. And if you're used to just showing up at work and being told what to do or given a stack of something to process, that can be much different when you're left to your own devices and, they're trickling in an email or Slack and trying to manage that inflow of information that you need to process. You have to have a plan in place and a support and a supportive kind of group to be able to work around challenges in this and not feel like you're just out on an island by yourself with no support. So I think, like I said before, change is difficult. People need to realize that, and people need to, take those same processes and controls that were in paper or in person and try to translate it to an online or remote kind of setting. So, I mean, that's just my 2 cents. I understand, it often sounds more utopia than it really is.
Yeah, I think, this is coming, whether we like it or not. I mean, it's already here, frankly, right? And the three of us on this podcast, we are working remotely at this point and are going to be working remotely for the foreseeable future. There is time and distance and all sorts of other factors to weigh in. I think this article succinctly does point out some good tools and techniques. And yes, we'll have a link to the article down at the bottom of the YouTube page, so feel free to read that if you're interested. But some of the pieces involved in this, in creating your success, really have to do with your working style. And I did like some of these suggestions. I know experientially in our work group, there are people who I connect with quite regularly, and it's almost like you're at that office environment where you're walking by somebody's desk and asking them a question. And I think instant messenger programs like AJ alluded to, like Slack, is very helpful, because you don't have that interaction. You don't have that kind of like, let me puzzle this out. And you can just throw somebody a message and say, I'm thinking about this, et cetera, et cetera. I know our next article, spoiler, is going to be about introverts. And as somebody who appreciates working from home and working on my own, I like the fact that I can still communicate with people, but yet at the same time, I'm not having a manager hovering over me. And that's the danger too, right? Especially in a hybrid environment. If you are somebody in a management position and you start giving people tasks to do and they have a part or full-time schedule from home, how do you manage them, and how do you manage the workflow and the work product without micromanaging them? Because that's the danger too, right? Like, you're seeing work product come in, you're seeing that person still continue to be able to successfully do their job, but do you have to nitpick them and have them write out every minute of the day that they're doing things so that, then it's not a good fit for your team, right? Then as a manager, you're going to fail at this hybrid model because you're too used to being in office and in person. And yes, I'm speaking from personal experience if you can't tell. Anyway, so, I think it's coming for a lot of companies. I think part of the great resignation, which is currently going on, a lot of people have said it's because they want more flexibility in work. They want more flexibility in where they work, what time they work, and managing family needs and other things. The big caveat is just make sure you're not overworking yourself because you're so available because you're always home. So I know of, myself included, people who are guilty of this on a frequent basis. So set your boundaries, learn how to collaborate remotely with a team, and you can be successful. I think our third article comes from Mr. AJ Wheeler.
Yeah. So our article this time is essentially power of introverts in the nonprofit sector. So this article kind of covers an extrovert versus introvert. So especially if you're like kind of seen working in the nonprofit sector, I think we maybe overvalue an extrovert in all sections of business and nonprofits. But essentially, if you're an extrovert, I think that's kind of like a desired trait sometimes that people kind of look at. So if you are an introvert, you probably feel intimidated by like networking events or social interactions that happen, especially if you're working in development, that can be a real like kind of paralyzing idea of having to call people and ask them for money. So the article kind of defines introvert, and it says an introvert is somebody who prefers to recharge by themselves. When it comes to regaining energy, introverts won't turn to stimulating social situations. Instead, they seek out solitude. So I think, and then, by contrast, of course, extroverts, generally speaking, are those who are motivated by stimulating environments. So like the social gatherings, and so introverts, what they make the case for their ideal for causal work, because if they are working toward a cause or leading a nonprofit and want to better understand the value that an introvert can bring, they're often team members that will, dive in and kind of really hone in on one specific task, and they're usually detailed orientated. So we're speaking in broad brushstrokes here. They're usually good listeners as well. They list keen problem solvers or other traits that they see. So the article kind of goes on to say how you can support an introvert in your organization. And the kind of bullet points that they list is think about their needs and how, you can support them and their personality type. Limit face-to-face interactions when possible. So maybe, communication via email or an instant messenger program is better than, hauling them into an office where they're going to feel uncomfortable in a social situation with everybody else, especially probably if it's like constructive feedback or something like that. Make an effort to listen to them when they speak up. Usually introverts speak up, I guess their baseline is not to say anything. Whereas if you hear an introvert speaking up, it's probably pretty important to listen at that point. Then the last one, which kind of tees off our last article, is try a hybrid or remote work model. Often if they have those traits of being a real like project or, detail orientated person, they probably can perform those duties that you're asking them to do in person in a remote or hybrid situation and not, have the stress of being in a social environment. So, but I'd like to get your guys' take, because I thought this was a really interesting article. I think we often, place a lot of value on an extrovert versus an introvert, and how, like both I think could be beneficial to an organization. And I've always been one for, a diversity of thought and people and thinking. So I think this article kind of like really drives home that it's not one type of person. Even if you're an introvert and you're working in the development department, you could be behind the scenes curating information and teeing up a lot of like potential donors that an extrovert can then go and get. So I think it's a really valuable kind of team member to have, and a different perspective, I think, that often we don't think about in a workforce, I think.
Yeah, I thought this article was quite interesting. I think it would be great to have both types working in your nonprofit. And I think the key to that would be to have an experienced manager that can work with both types of people and utilize their specific skills. Like AJ mentioned, introverts are more detail oriented. They're good listeners. They're good keen problem solvers, and utilize that in your fundraising or any type of projects you have. When you have fundraisers, I would expect the extroverts to be out there in the field and mingle and so on and so forth. And then you have your introverts who are working behind the scenes. But I think the key to being successful with these type of personalities, is your management team able to delegate the proper projects and skill, use each person's personality and their skill sets, and also supporting them. That's pretty important. Recognizing what introverts need to be successful, and even extroverts also. But I think the key to being successful when you're dealing with these type of personalities, I think, is having a good management team to support and to use them to the best of their ability.
Yeah, I think some good points, Tony. As an introvert myself, I can understand and feel this pain and this struggle personally, because extroverts, by their very nature, are right out there. They're telling you what they want. They're the ones who are vocal. They're the ones who are in your face. And while some introverts are shy, not necessarily all introverts are shy, but introverts tend to be more introspective and want to think through a problem before necessarily just bringing it to the table. And I think there's definitely a skill set for an introvert, and you have to kind of elicit that from them, right? It can really be hard to know what an introvert is good at, because they're not going to just come out and tell you. You have to figure it out. You have to elicit it from them, but they can be an immense worker and a great tool. I have a personal anecdote that I always tell when introvert stuff comes up. Back when I was in college, there were these job fairs that would happen from time to time, where you would have to go and meet people and glad hand effectively to try to convince them that you are the perfect person to get an entry-level position in their firm. And, at one meeting that brought up, we were talking about all these different events, and there was barbecue and there was this and that, and you'd go to these social functions. And, I raised my hand and I said, I don't get it. Accountants by their very nature tend to be introverted. Why the hell would I want to go to a party and a barbecue and try to be eating something off a paper plate while I'm meeting a potential employer? This seems totally contra. The whole reason I get into accounting, not only because I love numbers, but because I want to be left alone to just do my work. So, I got a lot of amens from that room, because, introverts, an extrovert planning an event doesn't think about the way that other people will be comfortable or not comfortable with it, but an introvert is constantly thinking about it. So, I tend to think that, Tony's idea of figure it out and to be a good manager, be able to manage both. And oftentimes good managers are introverts because they understand what's going on and they understand their staff that isn't as vocal and isn't as out there. But, it takes all kinds. It just takes awareness of everybody's perspectives to make the world go round. So, Tony,
yeah, and I think sorry,
AJ.
No, that's all right. I think Tony hit it on the head when he said, it takes a manager. And I think we've really been skirting around having good, what do they call it? Like emotional intelligence, or, really understanding your workforce and being able to put them in the right position for success. And that isn't just, understanding what they're good at from a work perspective or from like a workhorse perspective, but understanding where they're good at personality wise, and how that personality and understanding their personality traits to make a work plan and make a work environment that fits that personality to get the most out of them, and it's not always just nose to the grindstone, glad hand around, people have, and it's not a binary system. You're not either extroverted or introverted. There can be all different shades of gray in between that. So understanding somebody's emotional kind of intelligence on this is really important from a management position if you want to get the most out of your workforce. So, Tony, do you have our question of the week from the mailbag?
I do. So this is from someone working with a 501c3, tax exempt, but they're not there yet. They filed the papers and they're waiting for approval. So they're working with the legal team, and that some expenses were accrued that may be reimbursable. Then they were also working with some volunteers, and they wanted to know if they can bill the organization as a consultant to be reimbursed. So the question is, for my colleagues here, is do all the expenses need board approval?
Boy, this is a really loaded question. And I think, we said many times on this podcast, size matters. So if we're talking about a very small, and this sounds like from the question that it's a very small beginning nonprofit. In the case of a very small beginning nonprofit, you may have one person that's working in the nonprofit as like a staff, and then you have an oversight board. In that case, I would say they don't need to make this is just my kind of 2 cents here, but I don't, in this particular case, I would say that the board doesn't need to approve every expense that's going out, but they should be some kind of oversight of reviewing checks written every month, reviewing invoices that accompany those checks, because without a staff of more than one person, you have no controls in place and there's no double check. So the board needs to act as that double check. But I would say there was a piece of that question that was concerning, or at least needs board approval, where somebody that's involved intimately with the organization, either as a board member or as an ad hoc volunteer, wants to bill the nonprofit for service. And that's a related party transaction where they have some kind of connection or some kind of power in the board, or as a volunteer, that probably does need approval by the board if they're, and that person probably needs to abstain from that vote if they're on the board. So if this was a larger nonprofit, I would say, heck no, the board does not need to be in the day-to-day operations of an organization. They act as a financial safeguard and oversight of the executive team in a nonprofit. But because of the size of this nonprofit and their status, that they are essentially brand new and they haven't even received 501c3 status yet, I would say it's appropriate for the board to look and review at least the expenditures and cash going out of this company and weigh in on whether or not this consultant can work there. But yeah, Mark, what do you think?
Well, I think maybe a little bit of cart before the horse is going on here too, right? Is there even a board in place? You don't have a 501c3 yet. Are you just at the beginning stages, or are you an organization that has already existed that you're now trying to get your 501c3? And the 501c3 can be retroactive to the day that you file the paperwork. So some of the expenses you make before you get your 501c3 could be a tax write-off. I think AJ pretty much nailed this. It's that, your board in a normal circumstance wouldn't oversee all your expenses. But if you are small and you're starting up, I mean, the one word I haven't heard yet is a budget, right? So obviously if you're looking to spend your own money on something, you got to kind of figure out, is this towards the mission of the project, so that if we do get our retroactive status, will it be deductible? B, is it a related party transaction? And C, is it something that makes sense for what we're doing here? So, if somebody is spending a lot of money and it's a related party, that becomes a little trickier, right? That still doesn't mean that it's wrong, but if it serves the mission and it works, you need to have buy-in. I mean, one thing that I know, when I was at the root level of a startup organization before they got their 501c3, we would have, dual controls, right? So the person writing the checks wouldn't sign the checks, all those good things that we've discussed in the past, internal controls to prevent fraud. Just even in this case, having a second set of eyes before you become a fully fledged 501c3 to kind of help you figure out, is it on mission? Is it on target? And is it something that's going to be tax deductible if and when we get that 501c3 designation? So I think there's lots of factors to consider, but if you have a board in place, it's probably small at this point. You probably have a treasurer. As long as they're not a related party, there's no harm in running by some of these expenses before you make.
I also might say you're setting a precedence going forward. So if and when you have more staff and the board is no longer needed as that control piece to review those expenditures, you need to think about that time going forward where the board would quote unquote relinquish their review of those expenses, and it would go on, where like Mark was talking about, the accountant is preparing the checks that go out, the executive director is signing them and then sending them out. I would think, that needs to be a discussion too, and thought about, like when you're giving the board permission to review, or, when the board is taking the control piece of reviewing those expenditures, maybe putting a timeline or a stopgap on when that stops, and the motion for the board to do this would be a good idea, so that when that time comes down the road, it's not a push and pull between the board and the organization of who's going to do this.
AJ, I realize we've just left off a very important piece, and I hear our throngs of listeners out there screaming at their radios. What about the bylaws, right? Because a lot of this is going to be dictated by how your bylaws are written. Are your bylaws telling you that you need board approval over a certain threshold, et cetera? So this all comes into play. And as you're setting up your 501c3, you've probably already submitted a set of bylaws with that paperwork, but your bylaws should dictate how involved the board is and what set of oversight they have in the process. So I think with that, I think we're done, right? I think that wraps up another episode of Profitless on Purpose. We really appreciate you joining us today. Please visit us at Profitless Pod on Twitter and send us your feedback. Of course, we always appreciate good ratings, and we appreciate you joining us to discuss some nonprofit topics. Please engage in the conversation, and we look forward to seeing you next time on the pod.
Thanks, everybody.
Thanks, guys.